Okay, so most people think they know exactly what a bank does, right? You probably picture this giant, impenetrable steel vault, a super safe place where you just stash your hard-earned cash so it doesn't get lost or stolen. Well, what if I told you that out of all the money in the world, only a tiny, tiny fraction actually exists as physical cash, and the rest of your deposits? They're literally the fuel for a massive hidden business engine. Welcome to this explainer. Today, we are going to completely shatter some beginner assumptions and uncover the true hidden business of banks.
Think of me as your friendly mentor, Coach Kobo. Whether you're a curious first-time bank customer, or honestly, even if you've had an account for years without really thinking about it, we are going to step into the hidden world of finance and uncover these secrets together. We'll take this whole complex financial system and break it down so it makes perfect, everyday sense. By the time we're done, you are going to look at your simple savings account in a completely different light.
So let's start with a really fundamental question. Do banks really just protect your money? Because every single day, millions of people deposit their salaries, their business payments, and their life savings. And it's incredibly easy to just assume that those funds are sitting safely inside your account, resting quietly, simply waiting for the exact day you decide to withdraw them. But here is the secret. That money, it isn't just taking a nap.
See, the old assumption is simple vault storage, just stagnant, passive boxes holding cash. But the dynamic reality is active lending. Banks absolutely do not make their profit by simply babysitting your money. Think about it. If they just locked it in a vault, they wouldn't make a single dime. In fact, they'd actually lose money paying for security and building costs. Instead, they take that money and put it to work. They use it to make even more money.
Now, historically, way back in the day, the ancestors of modern banks really were just safe storage boxes, but they evolved pretty quickly. They realized that instead of letting all that gold or cash sit completely idle, they could lend it out to people who needed it for a short time and just charge a small fee for the service. That one realization transformed banks from simple, passive storage facilities into active, breathing engines of financial circulation that literally power our entire modern world.
But here's the thing. Every engine needs fuel, right? And that fuel is you. Well, specifically, your deposits. The more deposits banks receive, the more financial activity they can support. That is exactly why they want your savings accounts for your nest egg, your checking accounts for daily spending, your fixed deposits for long-term growth, even those seamless digital wallets you use on your phone. All of these are just different funnels gathering the vital raw material that fuels their massive lending activities. And it honestly doesn't matter if you're old school and hand over cash at a local branch, or if you're totally modern with direct deposits and tap to pay, you are part of the system. Traditional, safe savings accounts and modern digital banking services do the exact same thing behind the scenes. They equally help power this incredible circulation of capital. Your deposits are absolutely crucial to their entire business model.
So how does this circulation actually work in practice? Well, it happens in this continuous flowing cycle. First, you deposit your money. Second, the bank takes a portion of that and lends it out to someone else who needs it. Third, the borrower uses it to grow. Maybe they start a business or buy a house. And fourth is repayment. The borrower pays the bank back plus a little extra. The money flows directly from depositors, through the bank, out to borrowers, and right back again.
Let's bring this to life with an everyday scenario. Say you deposit $1,000 from your paycheck. The bank does not lock that $1,000 in a safe with your name on it. Instead, they take a chunk of it and lend it to Sarah. Sarah's a local entrepreneur who really wants to open a bakery down the street. Your deposited money is literally acting as the financial fuel that allows Sarah to buy her first commercial oven and sign the lease on her storefront. You are silently funding her dream.
And the ripple effect of that is just amazing. Because Sarah gets that loan, her bakery actually opens. Now she needs to hire a baker, a cashier, and a delivery driver. She buys flour from the local mill. She uses a local marketing agency. Your initial deposit didn't just help one person. It actively helped grow the local community economy by creating new jobs and services. The money is circulating, creating real value at every single stop it makes. And it goes way beyond just businesses too. Think about when a family in your neighborhood wants to buy a home. They rarely have the full purchase price in cash, right? So the bank steps in and provides a mortgage loan. But where does that mortgage money come from? You guessed it, the pool deposits of millions of customers, including you. Your savings are literally helping families in your own community achieve home ownership.
Okay, so you might be wondering, what is in it for the bank? How do they actually make their profit? It all comes down to the power of interest. When Sarah repays her bakery loan, or when that family pays their monthly mortgage, they don't just pay back the original amount. They pay back the original amount plus interest. The bank takes that interest, uses a portion of it to pay you a tiny bit of interest on your savings account, covers their operational costs, and the rest, that's their profit. Turns out, interest is the ultimate hidden engine.
And they are doing this on an absolutely massive scale. With savers' money, they issue personal loans for things like cars or medical emergencies. They handle massive commercial business loans for global corporations. They fund millions of mortgages. They're even investing in expanding global payment systems so your credit card works instantly anywhere in the world. Your money is a very busy, hard-working traveler.
Now, I know exactly what you might be thinking. If you're a first-time customer looking at all this active circulation, a totally natural anxiety kind of pops up. You're thinking, Coach Kobo, if my money is out there buying ovens for bakeries and houses for families, what happens if I need my money today? Can I still withdraw my cash? And hey, that is a completely valid question.
The answer to that lies in exactly how a bank divides up its assets. See, the vast majority of the money is out circulating in the economy as loans, but a smaller, incredibly important portion is kept completely untouched as cash reserves. Banks know that under normal, everyday situations, not everyone is going to ask for all their money back on the exact same day.
Think of that small portion of cash on hand as the bank's safety brakes. By keeping a specific, calculated reserve at all times, banks effectively manage their risk. This ensures that whenever you walk up to an ATM or whenever you want to instantly transfer funds to a friend, your money is completely accessible for withdrawal. They just keep enough in the tank to cover daily withdrawals while the rest of it continues to circulate and earn.
Which naturally brings up another really great modern question. Is digital circulation actually safe? Because let's face it, most of this money moving around isn't physical paper bills piled up in armored trucks anymore. It is quite literally ones and zeros flying through fiber optic cables at the speed of light.
Well, that is exactly why robust digital security matters more today than ever before. The old physical vaults of steel have been replaced by digital vaults of encryption. Banks invest billions into cybersecurity to protect these fast-paced circulation systems from modern threats like hackers and fraud. Protecting the digital system is just as crucial to the bank's survival as guarding physical cash used to be. They have to maintain your trust, or the whole cycle simply collapses.
Let's zoom out for just a second here and look at the big picture. When you combine your deposits, active lending, risk management, and secure digital systems, you get something that drives broad economic growth and stability. This continuous circulation cycle of deposits becoming loans isn't just about bank profits. It is the fundamental mechanism that allows societies to build infrastructure, invent new technologies, and expand living standards all over the globe.
Ultimately, understanding how banks operate helps you become way more financially aware. Now, this doesn't mean banks are inherently good or bad, they're simply powerful businesses. But having this foundational awareness really matters. When you understand the mechanics of the system, you can make much better choices about where you put your money, what types of accounts you use, and how you engage with borrowing and lending in your own everyday life. So, what's the ultimate takeaway from all of this? Well, the true power of your money is actually far greater than you probably initially thought. Your daily deposits are not just stored away in some dark, stagnant box. Your money actively fuels broader economic growth. You are a crucial participant in a massive, hidden business engine that shapes the entire world around us. Your financial footprint really does matter.
I really hope you've enjoyed breaking down this incredibly complex system together. But here is a provocative little question to leave you with. Now that you know exactly what your money is doing while you sleep, where are you going to choose to store it tomorrow? Make sure to hit that subscribe button to Deez Finance to keep leveling up your financial awareness. Keep learning, keep growing, and I'll see you next time.